To identify liquidity is the easiest way to turn profitable fast. I use liquidity sweeps in literally every single trade that I take, and it's helped me make over 7 figures. So in this video, I'm going to help you guys identify what liquidity is, where it lies on the charts, why we even use it. So with that being said, let's jump on the charts and let's get into it. So the first thing that we want to understand is, where does liquidity lie in the market? And it's as simple as liquidity lies above highs and below lows. So in order to identify where liquidity lies, we know it's above highs and below lows in the market, but we need to be able to identify what a high is in the market and what a low is in the market. A high is 2 candlestick pattern, a move up, then a move down. A low is a move down, then a move up. And liquidity lies above highs and below lows. And you're probably saying, well, TJR, holy shit, liquidity's everywhere on the charts. Yes, liquidity is everywhere on the charts, and liquidity is how the markets move, okay? Us pushing above highs, that is going to fill orders that are either going to push the market and continue the trend that it's currently in, or it gives the market the opportunity to reverse. And that's typically what the second option is typically what I take the majority of my trades off of, which is when price comes up above a high or below a low and is reversing the current trend that it's in, okay? So that's what I'm going to show you guys today. But the first thing that we need to do is just being able to identify where liquidity lies. And I'll give you guys a quick little summary of why liquidity lies above highs and below lows, but it's pretty simple. Like I said, there's a shit ton of orders that are resting above highs and below lows. So if we think about an uptrend, okay, how do uptrends move? This is beginner shit, right? Higher highs and higher lows. Awesome. When we push above a high, we're expecting it to go higher if we're in an uptrend. In a downtrend, we move in lower highs and lower lows. So when we push underneath a low, what are we expecting price to do? Continue lower. Now, this is great in theory, right? And a lot of retail traders, maybe some of you beginners, you guys see an uptrend, and then the second that price pushes above the high, you're like, awesome, that's confirmation. We can press buy because this is going to go to the freaking moon. Now, sometimes that is the case. However, the best opportunity for us is being able to catch the bottom of the new trends and the top of these new trends. So ideally, if we're taking a trade, we don't want to be pressing buy right here because we're already pretty deep into this uptrend. Ideally, we want to be pressing buy down here when this uptrend gets created, and we want to be pressing short or pressing sell up here when this downtrend gets created. And the only way to do that is by being able to identify liquidity. And again, where does the liquidity lie? Above highs and below lows. So we're not trying to be trend traders. We're trying to be reversal traders. That's what's worked for me. That's what my entire strategy is based off of. It's based off of liquidity sweeps and then seeing a trend form out of that so that we're able to either catch the